Holy cow! Facebook earnings tanked after the bell today. They missed on earnings. They were expected to come in at 385. They came in at 367. The revenue did beat at 33.67 billion versus expectations of 33.4 billion, but it was a disaster. They're losing $10 billion to the Apple's changes in their ad tracking. Honestly, this couldn't happen to a better individual to see Mark Zuckerberg have to squirm at an earnings report. Their stock after the bell dropped 22%. That's like $180 billion of market cap. Don't worry, we're going to get into the chart. We're going to look at what kind of opportunities there are to maybe buy at strategic support levels. But the overall outlook for Facebook, it's really gloomy. It almost seems like PayPal-ish how gloomy it was. They're pouring all this money into the metaverse, and we don't really know if that's even going to take off like everybody thinks, or at least how Zuckerberg thinks. I mean, let's be frank. You still got to take a piss in the real world. You still got to eat in the real world. You can't eat a digital turkey and have a full stomach. And probably the most concerning thing is that their most lucrative segments of their businesses, Facebook and Instagram, they're seeing declines. Let's be honest. People who are looking at Facebook is your HOA groups and the stay-at-home moms that promote their weight loss milkshakes and their oils that cures diseases. Shouldn't be a surprise that Facebook, also known as Meta, is struggling. Now, one of my big rules of trading is I never hold a trade through earnings, but particularly true with Facebook. This isn't the first time that Facebook has really shocked the investment world with a horrendous earnings report. Let me take you to the charts here. Let's go back in time to 2018. Everybody was loving Facebook. This stock was trading at its highs at $220 a share. What did it do? It disappointed mightily, going from 217 to 18, all the way down from its earnings down to 176. You know what that was? That was a 20% decline. We might actually beat that this time. But what did it do? Yes, we got a little bit of a bounce here in the near term. It bounced up a little bit, but ultimately, for the next 5 months, it was in a steady decline of lower highs and lower lows all over the place here, guys. So should you be buying the dip? I would probably wait for a little while, see where it settles in at, because even though it dropped 20%, it ended up going all the way back down into the 120s from the 176 post earnings. That means that there was another 30% decline in the share of the stock price after its horrendous earnings report back in 2018. Overall, it had to drop 44% before it finally found a bottom from right before its earnings report to where it ultimately settled in late December of 2018. Let's fast forward to the present day. This is your after earnings drop. Massive, massive earnings drop. And we've had a massive topping pattern going on for a long time now. I've been mentioning it on my YouTube membership page all the time about this massive head and shoulders pattern that has been playing out. We broke below it back in January, only to see price get just back above the neckline here. And then you have the earnings report comes out and everything goes to trash. So what kind of support levels are we looking at? I'm going to look at a shorter term support level to watch tomorrow, and then a longer term pullback if we get something more similar to 2018 where the stock continued to pull back even after the earnings came out. The first one goes all the way back to mid 2020. Solid support level right here that's being tested. It's going to open up somewhere around that. It may see further weakness in the morning, but for right now, it's sitting right on this support level. Does that mean you go buy right at the open tomorrow? No. What you want it to do is you want it to settle in a little bit, wait a couple of days, kind of like how a lot of traders did Netflix. You don't want to try to buy the dip because it could keep dipping. So let it form a base, let it rally some out of that base, and then consider getting long. Now, if this doesn't hold and we see a similar response where for the next couple of months it continues to sell off or it goes the route of PayPal on us, then check out this weekly chart here. This goes almost all the way back to when this stock first started trading. I would target a price probably somewhere around 174, 175. Yes, that would be another 30% decline, but we've seen a lot of examples out here lately. We've seen continuation to the downside with Netflix after it reported earnings. We've seen the continuous drip in PayPal that never seems to be able to catch a bounce. And we saw it with Facebook itself back in 2018 when it had a horrendous earnings report, sold off 20% and kept on dipping. So this is a very real target here. This is the ultimate area where I would love to be able to buy Facebook if it continues to drop. 174, 175, maybe if it takes a little bit while longer, around 178. So there you have it. That's short-term support. You got your long-term support. Manage the risk. Use stop losses. Don't take any of these things to be solid support levels that can never break, because support levels and resistance levels are made to be broken ultimately. They're there to guide you, to provide you with opportunities to play off of. If you enjoy this video, make sure to like and subscribe, and be sure to check out my YouTube membership channel. By clicking the join button below, you'll get all my market research each and every day, including the most interesting charts, my watch lists, and updates on all the FANG stocks, including Facebook, and on the indices as well. Let me know down in the comments, what did you do with Facebook? Did you get burned by the earnings report? Did you, or are you planning on buying the dip? Let me know. Thank you guys, and God bless.